Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, August 8th, 2011 is sponsored by Realtik. Alright guys, we have major things going on today. The market's down huge on the day. S&P, Dow, NASDAQ down basically 4% across the board. Dow is down 386 points. NASDAQ is down 110, folks. That's a 4.36% drop. S&P 500 down 53, a 4.4% drop. Markets, you can see in front of you, this is the SPY, which mirrors the S&P 500, is getting slammed by $5.25. We just pierced the 115 level, which is very, very key if you want to look at the daily charts. This is actually a target level to watch very closely. The president is just about to speak. If I zoom out on the charts, I want to show you guys something. Take a look at this. If I draw this in, this is a classic head and shoulder pattern right here, which we called again, and notice the breakdown here with confirmation. That signals it was in play. The target on this, get this folks, is a break of 115 right here. And that's what we're doing right now. Now, will the markets definitely hold up here? I don't know. The markets are in free fall. It's panic central out there. We have to watch very, very carefully here to see what happens. But nonetheless, the markets are collapsing today in epic proportions. Again, this is your 115 level on the daily chart. That's exactly what you're piercing now as we speak. So again, it'll be interesting to see if the markets hold this level by the end of the day and ultimately see what happens. All right, again, President Obama is going to be speaking here any minute. I'm going to kind of tune into that as it starts to happen. So I wanted to get this video done with so I can look at that and hear his response to the S&P downgrade. And that's really what the markets are collapsing on, folks. You can see breaking through the 115 level short term. But the question is, again, will it get propped up? Will the PPT plunge protection team come out and save this market? The markets, again, are down 15% in the last 12 trading days. Basically, in the last 2 weeks, down 15%. This is, again, type of market conditions you have not seen since 2008 and 2009. It is unbelievable to see the drop. Again, on the spiders, if you go back to the daily chart, just a couple weeks ago, we were at 135. We're now below 115. That's a $20 plus fall on the SPY. Unbelievable. Now, there are some bright spots in the market, but it's mostly gloom and doom across the board. Google's down 22. Apple's down 11.5. Amazon's down 7.5. One of the bright spots would be Intel. Take a look at Intel here. Intel is coming off the highs a little bit here, but if we get the chart up to pop up there, notice Intel is actually holding around the flat line. A little bit of a pullback here to the negative side, but was on the positive side for now. And that's something I'm watching very, very closely to see how that all plays out right now. And again, we're waiting on President Obama to speak. Now, bottom line is this, folks. Many people are panicking, thinking the markets are going to collapse. It's always a possibility, so you always want to play with caution out there in the markets. Basically, to tell you what I'm doing, I'm fishing a little bit today. What I call fishing is picking up half positions. I've picked up 2 half positions today on the long side right here at this low level that we're currently at on a couple different stocks. All right, a couple different stocks out there, and that's what I'm doing right now to test the waters. And again, notice how I'm not picking up full positions. I'm taking small little dip my finger in the water type situations to test how hot it is. And that enables me to have a little bit of a wider stop. And ultimately, if we do get a bounce, it's going to be a snapback bounce, which will make it so the target can be much, much higher as well. And this is a way you kind of handle the stress of the market. This is a way you can maneuver through it. And again, there's no guarantees that the markets are going to stop falling here. But at some point, you do want to kind of dip your toe in the water. Again, the key is to do it in a very small way. I'm, again, majority staying in cash because that's the smart play to be. That's what everyone's doing right now. Therefore, I'm going to do a majority of that as well. But at the same time, I am dipping my little toes in the water to kind of test out what's going on here. And again, spiders down around 114.40, piercing that 115 on this current candle. Obama is just about to come on TV here. And again, we'll keep a close eye on it. Let's take a look at oil today. The USO, really, it's not that much of a drop continuing here, which I kind of find fascinating. Markets are collapsing, but oil's not confirming that. Granted, oil's down, but it was down this much early in the day. Usually you would think if oil continues down, the markets would continue down. One thing I am watching on this chart, folks, take a look at this area down here. We're very close to a major level of support right down here on the USO. If we get a little bit lower, I'd be tempted to pick up a half position on the USO as well. GLD is soaring today, up $5.66 at the highs of the day. I'm even tempted to be on the short side of that, believe it or not, but I'm not doing that yet. It's too risky on gold to be short gold right now, considering what's going on out there, so I'm staying on the sidelines. Again, I picked up two small half positions to dip my toe in the water down at these below 115 level area, right around this 115, which is again the conclusion of the head and shoulders pattern. That's what I'm testing right now to see if we get any stabilization. But again, this is a high risk market to be involved in. Most of our traders, most of our people, including myself, are majority in cash, meaning like 75% plus in cash at this point, if not more. I think for me, I'm about 80 to 85% in cash at this point, as I just have inched in a couple positions out there across the board. All right, let's take a look at SLV. SLV is also having a good day on the day. SLV is trading up $1, although it's not as strong as gold today because silver is also an industrial metal, which has to be, understood as well. There you can see it's not really making new highs going vertical. It's just kind of going sideways here, holding its gains, as it is kind of a store of safety as well. The dollar today, folks, let's take a look at the dollar. The dollar chart trading flat to positive, which is kind of counterintuitive. You would think, well, the U.S. gets downgraded, wouldn't the dollar fall? Not the case. Why? Because Europe is still in much worse shape than we are here, folks. Regardless of any little downgrade, Europe is an absolute mess out there, and that is something that we want to keep a track on as well. All right, what else do we see out there? Exxonmobil, take a look at Exxon here, down $3 on the day, an unbelievable drop. You can see there's so much volume in this market. The charts are taking a little time to pop up. Chevron is down about $5 on the day, lows of the day. If we go to the daily Chevron chart, this was your last support. You took that out today. Where's your next support? That's actually not until this area down here, which we're getting close to, though. There's actually a nice little level of support on Chevron at 92.25 that you can be watching very, very closely right now. All right, so keep an eye on that. We'll watch it very, very closely as the markets, again, await President Obama's speech today, and we'll see exactly what happens. Partially, part of me expects the PPT plunge protection team to step in here. By the way, one stock and one sector getting crushed the most today, take a look at Bank of America. Bank of America, this reminds me of the olden days in 2008 when Lehman failed. Bank of America is down $1.33 on the day to $6.85. That is a tremendous fall, epic fall. Take a look at Citigroup. Citigroup down almost $5. Look at this cliff dive on these financials. There's a lot of worry that they're going to be exposed and need another bailout out there, folks. It is an unbelievable situation here. AIG, look at AIG down $2.50. Ugly drop there. Even JP Morgan, which is probably one of the strongest out there, still getting crushed by over $3. And again, staying away from financials right now is probably the smart thing to do. I had some financials on Friday, moved out of it very, very quickly, moving out, and that's turned out to be the exact right move here coming into Monday. Goldman Sachs is down almost $10 on the day as the markets, again, you have the NASDAQ down $118 right now. Get that, guys. $118. Wow. In any case, looking across the board, let's go back to the spiders. Spiders are getting a little bit of a bounce, minor bounce here, but not much yet. Again, watch to see if we close above the 115 level today. If you close above the 115, that might be a signal you get a little bit of a bounce tomorrow. If you close below 115, who knows? Volume today is 350 million as it's approaching 2 p.m. Eastern time. This is all what we're looking at right now. How much volume in the market? Friday we had something like 600 plus million. Thursday we had 500 plus million. What do we have today? It looks like it's on pace for about 500 million today in total. The question is, again, can we get back above the 115 or hold the 115 level today? If you don't hold the 115, 113 is your next major spot on the SPY, which mirrors the S&P 500. All right, guys, I'd love to give you more information here, but join the free trial at inthemoneystocks.com. It's a 7-day free trial. I got to get back in the chat room at In The Money Stocks. You can join the chat room or the research center or both. Take a 7-day free trial, no obligation. Come in, learn what's going on in this market, learn how to handle this market right now. It is one of the most unbelievable market environments I have seen, again, since 2008, early 2009. You haven't seen anything like this. I'm not overall surprised. Nick and myself have been calling for something like this. Just the question of timing was what it's all about. I'm a little surprised it's happening this fast and this furiously. I would have thought a little bit later this year would have been the key, but you know what? Frankly, when time is up, time is up. And you got to be ready for it. You got to be ready to react, and that's what we're doing here at InTheMoneyStocks.com. So again, we hope to see you in the free trial. Come learn more about it tonight. Videos, swing trades, you name it, it's all included there in the Research Center, or join the chat room to ask me questions live and look at my charts live and everything else. Take care.